Hi, welcome back. I think we have the management of Biocon joining us now with regards to the Q2 FY13 numbers. Kiran Mazumdar-Shaw, the CMD of Biocon, is here to talk about that. Hi, Mrs. Shaw. Thanks very much for joining in. Just going to start with the segmental revenues this time round. It's been an across-the-board growth. Can you just give us some sense in terms of FY13 guidance? What would the segments, for example, biopharma, branded formulations, as well as the CRAMS business look like?
Well, basically, the biopharma business is gaining traction in emerging markets and in the US, where in the emerging markets we are seeing our APIs and insulins, gaining a lot of traction. In the US, both tacrolimus and fidaxomicin have really had good growth. And these are really what are driving growth. So you can see that our biopharma business, excluding the branded formulations, has grown 20% year on year. Branded formulations has actually grown 45%, and this is something which we are very focused on. As you know, we are very keen on making sure that this segment delivers good growth for Biocon, given that it has grown from a low base. And we want this to be a 500 crore vertical by the next fiscal. So I think this is something that we are very focused on and very confident that we can actually build very strong brand value and a strong and large growth segment on.
Okay. Kiran, you have you have increased your R&D expenditure considerably. What are you expecting to churn out of this, and how soon?
Well, you know, Lata, this whole research investment that I'd like to call it, and not research expenditure, is something which is very inherent and integral to our business. This is an investment that needs to be made in order to deliver exponential growth in the future. And, excuse me, as we get into the clinic, these spends are going to increase. So what you're seeing today is a 57% increase in R&D investment. And this is driving all our various programs, such as insulins and our novel programs.
No, I appreciate, yes, Kiran, I take your point that it's an integral part of the company's growth. I'm not contesting that you're spending more money on it. What I'm asking is if you can give us some timetable of what you see as potentially lucrative candidates, and by what time will the company be able to harvest the money that is being invested?
I'll try and answer that, Lata. First and foremost, we have announced this quarter that we have seen some good data coming out of our recombinant human insulin program in Europe. So this basically allows us to seek marketing authorization in 2015. So this is something that will basically start realizing, returns for us in developed markets from then on. Glargine is also progressing well. It involves greater R&D investment. We have the money in place, considering the fact that we have the Pfizer money to actually advance all these programs. Biosimilars, as you know, is something that we've partnered with Mylan. In the interim, you are going to see a very large growth opportunity for Biocon in the insulin segment in the emerging markets. We are already gaining a lot of traction in many emerging markets: LATAM, Mexico, Middle East, North Africa, Southeast Asia. This is something that is really going to drive growth for Biocon in the coming years. If you look at our novel programs, Iron 105 is something that has incurred R&D investment, and going forward it will incur more investment. Having said that, we are in very advanced stages of finalizing our development partnership with a large pharma. We are looking at licensing and partnering our itolizumab or our CD6 program, which should happen in the next 12 months. And then we are looking at also partnering our anti-CD20 program, the BVX20 program, which we are just about to enter the clinic. That also will probably get partnered over the next 1 or 2 years. So I think the timelines for novel molecules and for biosimilars, unfortunately, is much longer than generic programs. And therefore, you are looking at a timeline of, anywhere between 1 to 3 years before you see any returns on these kind of investments. But we are very confident that the returns are going to be of a very large magnitude.
Sure. Mrs. Shaw, just actually wanted to focus on a two-part question. One was with IN105, which is basically your oral insulin. You did mention that there is a possible licensing deal with which is possibly on the cards at this point in time. Can you just throw some more light with regards to the contours of it, and which markets would it possibly be focused on, and by when could it possibly culminate? And would you actually be looking to possibly find a different partner besides Pfizer for the deal that you earlier had in place with them?
Well, I'll answer your questions in two parts. As far as IN105 is concerned, there is a lot of clinical development required ahead of a designed phase 3 clinical trial. So I think there is some time to go before you can see this molecule in the market. So I do want to be cautious about managing expectations, because I think this is a very exciting program, but it is going to take quite a few years before you see this product commercialized. Having said that, we are engaged and we are in advanced stages of finalizing a development license with a large pharma. So initially it is going to be a back-ended deal. So that's not something that is going to generate a huge amount of licensing income for us in the short term, but it does have the profile of generating pretty large licensing income for us over time.
Actually, Mrs.
When it
Shaw,
comes to
yeah, sure, go ahead.
So it is going to be a back-ended deal, as I mentioned. When it comes to finding a partner in place of Pfizer for the developed markets, yes, I think we are in the process of engaging with several companies who can fill that space.
Okay. You have this interesting deal with GE Capital picking up stake in Syngene. How close are we to an IPO?
Lata, to answer that question, I think when we looked at taking Syngene to the market, we realized that the valuation that the market was according to Biocon, we felt was not optimal. And we believe that unless we created a benchmark valuation for Syngene, we would be undervaluing Syngene when we took it to the market. As you know, we've never wanted to take Syngene to the market just to raise capital. It was more to unlock value for Syngene. And I think we believe that at a time when the markets are not really valuing companies as optimally as we want them to value, we felt that this PE route of getting GE Capital, which is a high-quality investor, to take a stake in Syngene would really start unlocking the right valuation for Syngene before we took it to the market. Now, why GE? Because, I think there were many suitors who wanted to get in, have a stake in Syngene. But we believe that GE was the best investor for Syngene, because GE itself, in its organization, has some leading-edge expertise in life science-based technologies, especially in biologics. And we felt that this would actually allow Syngene to, further differentiate itself and be in a position to offer enhanced research services to its global customers. So I think this has to be taken as an investor and an investment that goes beyond just the financial investment.
Okay, Mrs. Shaw, just before we wrap up the interview, just had one last question with regards to the R&D expenditure, because that is on an upswing. Any sort of pressure that you would possibly factor in terms of margins going forward for Biocon? Because that is actually one key concern with analysts, that your R&D expenditure would scale up quite significantly, hence would pressure margins going forward.
Well, you can see that despite R&D investments increasing, in fact, they've increased 57% year on year, despite the fact that we have had to contend with rising fuel costs and therefore increasing power costs, despite the fact that we have had to contend with increased personnel costs and higher import costs because of the depreciating rupee, we have still delivered an 8% increase in both at a PAT level and at a EBITDA level. I might also add that we've seen many of our EOUs lose tax benefits, and therefore we've also had to take a much bigger tax hit this half. So given all that, I think we've done extremely well. And I would also like to once again emphasize that R&D is an integral part of Biocon's business. And I think we are going to see increased R&D spends. And I think this is, as I said, to be taken as an R&D investment because we are investing in growth. And I think we would like analysts and investors to understand that unless we invest in R&D, and these spends are only going to increase because as molecules go into the clinic, the spends are going to increase. But going into the clinic is also a reflection of advancing these programs. So I think it has to be looked at in the right context. R&D spends are going to increase, but so is our business going to increase. So we will have to build models where we can sustain such R&D investments.
Fair point, Kiran. Fair point. Point taken, and that is perhaps the next level to which Indian pharmaceutical industry should ascend. Thanks a lot for joining us with your numbers and with those details. We have to take a break. We have more corporates waiting by. We are back in a jiffy.